folks, I want to welcome you to the second quarter of 2017. Over the weekend, I've taken my mountain bike back out and enjoyed some great times, as you saw by the footage. And that's given me some good time to also kind of gain some perspective, kind of clear my mind on what to focus on for the second quarter. And coming into a new quarter and really into a new month, there's really two things that I think any trader or investor should do. And keep in mind, like I always say, this shouldn't be a hectic business. You shouldn't have to be looking at the market the whole day. If you have a nice rhythm, that's the most important thing. You don't have to look at the stock market 8 hours a day. In fact, if you look at it for more than maybe 45 minutes to an hour a day, you're probably overthinking things and it doesn't fit your lifestyle anyway. So anyway, there's two things that need to come into mind when an investor and trader comes into a new quarter. So number one, of course, you need to be able to evaluate what you did well the previous month or the previous quarter and what you could improve on. So like for example, for myself, I think I remained quite patient in the first quarter of 2017, but I do think I could still be even more patient when it comes to some of the themes that I'm looking to work out to continue to work out. Number two is the theme of like where could you see money flowing to in the new quarter or the new month. In this case, we're talking about this new quarter. Personally, I think the financial sector continues to be something that we could see some strength. I think the technology space is probably getting somewhat overheated. And I also like the healthcare space and potentially biotech. So let me just go through these three charts real quick back here so you have a bit of an idea of what I'm focusing on coming into the second quarter. So one of the main things that I do when I come into a new quarter, and I think anyone should do this, it literally takes like 10 minutes to do. It's really worth it, guys. Again, like I said before, if you want to be a successful trader and investor, you don't need to spend the whole day looking at the charts. You got to have a rhythm, an hour a day. Usually you should do it to keep the doctor away. So let's have a look at it. What I like to do is have a bit of an idea of where things stand relatively speaking. So first chart here, again, three charts real quick. First chart, S&P 500, or actually it's the NASDAQ 100, the NASDAQ 100 divided by the S&P 500. And what you can see here, what we call a ratio chart. I teach this in my stock market playbook course, which is incredibly important to understand how these ratio things work, so to look at things in relative terms. Look at this chart here. You can see the NASDAQ 100 divided by the S&P 500. You can see an almost relentless rally. Actually, it is relentless, basically coming right out of the election, or at least a few weeks after the election of last year. And I do think that this relative strength, albeit I don't want to fade it, I want to fight it, I do think it's getting somewhat long in the tooth. So to me, this has been an opportunity to take some profits in some stocks that have trended very well, like Facebook and Apple, and I'm looking for new opportunities. So there are two things that I continue to like. Number one is the financials versus the S&P 500. Here you can see you've had a little bit of weakness as of late, and that's mostly been because the yield curve is basically flattened a little bit. And so some people have been taking profits, but I still like the relative picture in financials versus the S&P 500. I still think there's a lot of good stuff happening here. If you just look at it a little bit more near term, you can see very simply all we've done since we broke past resistance here last November is we've now basically consolidated for some time. We're coming right back to what used to be resistance, what I think is now going to be support. So I like the financials. And the other thing I like to look at here for the second quarter of 2017 is I do think there's a potential case to be made that the healthcare space will start to give us some better price action. We've seen a decent sort of counter trend move here. The trend in healthcare stocks and drug stocks remains very clearly lower, but there is some signs here that this might have been the last sort of leg lower, and that this reflation that we've seen over the past couple of months might be the beginning of something bigger. If you look at biotechnology stocks, this is a space that we're going to show you guys this chart here. In absolute terms, you can see the biotechnology stocks are right at the upper end of what has been a range that has frustrated the heck out of a lot of traders and hedge funds that I speak with. But I do think it's increasingly likely that we start to see biotech start breaking past that $300 mark and start breaking higher. And I think that theme could play over into the entire healthcare space. So again, to summarize, technology space, tech stocks broadly speaking, likely are finished with their dramatic outperformance. I think we could see some of that money morph into financials or continue morph into financials as well as into healthcare stocks. Hope this makes sense, guys, and I'll see you in the next video.